अब अभी भी मुझे नहीं दिख रहा कुछ भी, लाइक
अब तो नहीं दिखा रहा है।
ओके नाउ ओके
दिखा रहा है।
ओके
ठीक है सर, दिखा रहा है। हेलो,
ठीक है। Hello students, me CS Dilip Chenani. As you know that, that today we are here for discussing about the all the MCQ questions of costing, and I'm very thankful for Crack Grade B, which provide me this opportunity. So students, as you all know that your exam on Feb 20 2022, Feb 20 2022. So we are preparing for it, and today we are going to start MCQ part of costing. Okay, so here we go. We are going to start our costing part MCQ questions. Here is part 1 of MCQ. Just look at here. Question number 1. Type of accounting which measures, reports and analyze non-financial and financial information to help in the decision making is called. Means they are asking about type of accounting. Okay, so for solving this question, first of all, you have the knowledge. You have to be the knowledge about accounting. So first of all, we are discussing about accounting. If we talk about types of accounting, there are three types of accounting. Generally, three types of accounting. One is financial accounting. One is financial accounting. One is cost accounting, and one is management accounting. These three are the accounting types. These all are the types of accounting. Financial accounting is a help to check out about the profit and loss and our financial and profit and loss, and the other accounting objective of financial accounting to check about the financial strength, financial position. Cost accounting, if we talk about cost accounting, its major objective, the cost accounting major objectives are to find out the cost and to set about the selling price. These are the objective of cost accounting. And second is selling price. Second, for management accounting, it is linked with the whole accounting procedure of management, like reporting, analyzing of all the data. So the correct answer is management accounting. Okay. Question number 2. Question number 2. Which one of the following is not considered as a method of transfer pricing? Negotiate transfer pricing, market price based transfer pricing, fixed cost price based transfer pricing, opportunity cost. When we study about the transfer pricing, there are methods of transfer pricing. There are lots of methods of transfer pricing, and these methods are as under: first, opportunity cost transfer pricing; second, negotiate transfer pricing; and the third is market price transfer pricing. These are the three methods of transfer pricing, and these are, so in this question, what are the option we have? Negotiate transfer pricing, market price based transfer pricing, it is also part of method of transfer pricing, fixed cost based transfer pricing, and opportunity cost. So the right answer is C, fixed cost based transfer pricing. Okay, next question. In cost accounting, purpose of in cost accounting, purpose of variance analysis. As we studied about variance analysis, variance analysis also known as standard costing. Variance analysis is also known as standard costing. Okay, now how the in standard costing, what we have to do? First of all, we have to set some type of standard. After setting the standard, it is compared with the actual data. First of all, we have to set some type of standard, then we have to compare with the actual data. Then after comparing, there is some type of variance. There is some type of variance. For finding out the reason of variance, we have to take some type of measures for controlling it. Okay, these are the steps we have to do in standard costing in variance analysis. Okay, so now what are the options there? Understand the reasons for variance, right? Take remedial measures, right? Improve future performance, right? When first we have to set a standard, then after setting the standard, we have to do comparing with the actual performance. Then there is a variance between the standard data and the actual data. There is a variance between the standard data and actual data. First of all, we try to find out the reasons for that. After finding the reasons, we take some type of remedial measures by which we can improve our performance in future. Okay, so third answer is all of the above. Okay, moving to the next question. Absorption costing is also known as, now just look at here. We have read two methods of costing, especially marginal costing and the other is standard costing. marginal costing, and with marginal costing we also read about absorption costing. In marginal costing, how the profit is calculated: sales, then we have to deduct variable expenses, from the sales when we deduct all the type of variable expenses, then we have contribution, less fixed cost. At the end we will get profit. So marginal costing is also known as variable costing, because in the marginal costing profit totally depend upon the sales and variable expenses. Fixed cost always fixed. There is no relation between the variable cost and the fixed cost. In the absorption costing, in the absorption costing, sales, from sales we have to deduct all the type of cost, either variable or either fixed. When we deduct from sales all the type of cost, then we will get profit. In absorption costing method, there is no difference between the variable cost and fixed cost. In this, fixed costs also charge as per the production. For an example, just look at total units, 10,000 produced, variable cost per unit 30 rupees, selling price per unit 100 rupees, fixed cost, fixed cost 50,000 rupees. Now what is the profit? If we talk about profit, first of all we are doing with the help of marginal costing method. This is marginal cost method. First of all, sales, 10,000 units multiply by 100, that is 10 lakh. Then we have to deduct all the type of variable cost. 10,000 multiplied by 30, that is 3 lakh. Then we will get contribution. Contribution is 7 lakh. From this we have to deduct fixed cost, that is 50,000. And here we get 6 lakh 50,000 profit. But in absorption costing, what we have to do, calculation profit, how we calculate the profit in absorption costing method. Sales 10 lakh less cost A, B, variable cost, that is 3 lakh, fixed cost, that is 50,000, total 3 lakh 50,000, then profit is 6 lakh 50. Now your question is that in the both cases profit is equal, but now if the production or if the sales for 12,000 units. Then what happened? Just look at here. In marginal costing, sales 12 multiplied by 100, 12 lakh. 12 multiplied by 100, 12 lakh. Variable cost, less variable cost. 12,000 multiplied by 30, 3 lakh 60,000. That is 8 lakh 40,000 contribution. Now we have to deduct fixed cost. Either we sell 10,000 units or we have to sell 12,000 units. According to the marginal cost, fixed cost remains always same. Either sale increase or decrease. 50,000. Then overall profit 7,90,000. If we talk about if we talk about absorption costing, sales again 12 lakh. Now cost A, variable cost 12,000 into 30, 3 lakh 60,000. B, fixed cost. B, fixed cost. Now it is charged as per the production. How? This 50,000 costs for 10,000 units. Now we have to calculate for 12,000 units. That is 60,000. It means in absorption costing method, fixed cost charge as per the volume of sales. So total profit is 7 lakh 80,000. Clear? This is the total profit in the absorption costing method. So marginal costing is regarded as variable costing method and absorption costing is regarded as total cost method. Clear? Just look at what are the options we have. Options are first option total costing method, committed costing, target costing or discretionary. So answer is a total costing method. Okay. Now, which of the following is not with the regard of margin of safety? What do you mean by margin of safety? It is a point. At least we have to sell those products when we get profit. If we want to earn profit, it is a point which is more than the BEP sales. So the first formula, just a second. First formula of margin of safety is total sales minus BEP sales. One more formula for MOS, margin of safety is profit divided by profit volume ratio. Okay, these are the basic formulas. Now just look at what are the option we have. Margin of safety profit. This is misprinted. Profit divided by PV ratio. Margin of safety total sales minus sales at the BEP. Okay. Margin of safety percentage of total sales minus sales at the BEP of total sales, right? Last is MOS, margin of safety, PV ratio multiplied by sales minus fixed cost. No, it is not a right option. So the MOS can't be calculated by this help of this formula. Okay, next question. Which of one of the following is not to be considered for preparing a production budget? If you are going to prepare any type of production budget, then what things we need it? For the preparing production budget, first of all, we need proper planning. Then we have to think about raw material budget. Then we have to check about material. We have to check about labor and direct expenses budget. How many goods we are going to produce, how many things we are going to produce, it depend upon the demand demand in the market. It totally depend upon the demand in the market, how much demand in the market. So we also have to think about sales. These are the basic points for preparing any type of production budget. We also think about purchase of material. Purchase of material. These are the essential for preparing any type of production. Now, what is the question? Which one of the following is not to be considered for preparing a production budget? The production plan of the organization, right? The sales budget, right? Availability of raw material, right? Research and development budget. It is not required at the time of preparing any type of production budget. Next question. The break even point is the point at which, just look at BEP, break even point. It is the point where all the costs is always equal to the sale price. All the cost is equal to sale price. When sale is equal to cost price, then this situation is regarded as no profit or no loss to the organization. So, right answer is A. There is no profit and no loss. Next question is planning and control are done by in an organization. In any type of organization, there are three levels: top level, middle level, and lower level. In top level, we includes all the directors and CEO. In middle level, we include all the managers. Lower level, we include all the supervisors. The work of top level management to set up about all the type of plans, to set up all the type of strategy, these planning and control, these are the work of top level. when the plan are decided by the top level management, then the work of middle level to make proper strategies for achieving these plans. They create plans, they have to make strategy, they make some type of work how we achieve the plan. Their work how we achieve that. And supervisor level, main work done by them, giving instruction to the to workers. So now what is the question? Question is, planning and control are done by the top level, lower level, all level, none of the above. So it is a work of top level management. Okay. Now, what are the uses of management accounting? What are the uses of management accounting? Just look it. It is compulsory. Have to use management accounting. It is compulsory. It is optional, mandatory as per law, none of the above. It depends upon you. You are using proper management accounting or not. Because government always wants some type of taxes. So for tax, financial accounting and cost accounting is needed. So management accounting is always optional. Okay. The budget are classified into three categories, that is on the basis of time, on the basis of function, and all the basis of flexibility. On the basis of time, short time, and for long time. On the basis of function, purchase budget, sales budget, production budget, cost budget, different type of department, different type of budget. On the basis of flexibility, fixed budget and flexible budget are prepared. Okay. So right answer is all of the above. We have also discussed in the budget costing about the classification of budget. You all have these lectures in your courses. Now, next question is, which of following department is most likely responsible for a price variance in direct material? Now just look at it. If we talk about material variances, in a material variance, first variance which we have to calculate, that is material cost variance. For finding out the reason why there is a variance between the in material cost variance, we have to find two more variances, because mistake is done by the two departments, and these departments are, first is production department, because they use the quantity more than or less than which have we set the standard, and one is the mistake of purchase department. Why they purchase higher or lower prices which is set by the directors and managers. Like we are taking the example, standard quantity which we needed to produce any type of product, which is needed to produce a product that is 1000 kg. For the production of sugar we need 1000 kg of sugarcane. In the market the purchase price of 1000 kg is 100 rupee, when in actuality we purchase the quantity. Production department give the order. Production department give the order to the purchase department, purchase around 1200 kg of sugarcane. Okay, and in the market the rate of sugarcane is around 130 kg per kg. So rate is 100 kg as decided at the standard level. As per the past the rate is 100, but the department purchase the goods at the rate of 130. Which department purchased this? This purchase department purchase department purchase the goods. So it is a mistake of purchase department. Okay, so the answer is purchasing department. Okay, ideal time variance is always, first of all, what do you mean by idle time? When the labor is working, then due to the power failure, due to the power failure, due to the strike, sometime lost, sometime lost. This due to the this is the negative situation for any type of organization. Any type of organization, if any time lost due to the power failure or due to the strike, it is always negative. So idle time variance always adverse, always adverse. Okay, next question. In marginal costing, stock is valued at. In marginal costing, stock is always valued. We just discussed about that. If we sell high, then variable cost high, because it's totally depend upon the sales. Okay, how much stock we are going to sell, it depend upon the variable cost. If we are selling 10,000 units, if we are selling 10,000 units, so cost of goods of 10,000 units, because in variable cost we include direct material, direct labor and direct expenses. Direct material, direct labor, direct expenses. So in marginal costing, stock is always valued at variable cost. Okay, next, cost price is not fixed in case of, just look, when we are doing the study of contract costing, two type of methods of taking contracts. One is fixed price and the other is cost plus. In this, always a fixed price charged by the contractor. In cost plus method, contractor give all the records to the contractee that in 3 year 4 year when the contract completed, total cost is there, give me a fixed percentage profit on cost. So when the price are not fixed, we have to use cost plus contracts. Okay, so answer is cost plus contracts. Okay, continuous stock taking is a part of. When we doing continuous stock checking or taking, it is a part of always perpetual inventory. It is always part of perpetual inventory. In ABC analysis, in ABC analysis, stock is divided into three parts. A category, which is very, very important for the organization. B, less important. And C, not more important or not demand in the market. So in ABC, stock is divided into three parts: A category, B category, and C category. Annual stock level. In annual, at the end of accounting year, we calculate about cost of goods sold about the stock, but in the perpetual entry we check stock regularly and continuously. Okay, next, in reconciliation statement, expenses shown only in financial account. In a reconciliation statement, expenses shown in financial accounts. Now first of all, what do you mean by reconciliation statement? Listen, when cost sheet profit is not equal to the financial profit, is not equal to the financial profit, for the checking reason and for equalization purpose, we have to prepare a statement which is known as reconciliation statement. Okay, now what is the question? In a reconciliation statement, expenses shown only in a financial account, added to financial profit, deducted from financial profit, ignored or added to costing profit. In this situation, all the expenses which are shown in financial accounts are added to the financial profit. Always added to the financial profit. Okay. Operating costing is applicable to. First of all, what do you mean by operating costing? Where some type of operate to the customer, where we are providing different type of services to the customer, services to the customer, then it is regarded as operating costing or service costing. In hospital, treatment of patients are done, so they are providing services. In cinemas, In cinemas, again, the multiplex and movie services given to the to the customer. Transport, they are providing the services of transport. So the answer is all of the above. All of the above. Okay. Next, flexible budget requires a careful study of. As we discussed in the budget chapter, on the basis of flexibility, there are two type of budget. That is fixed budget and one is flexible budget. One is fixed budget and the other is flexible budget. In a fixed budget, always cost is divided between the fixed costs and fixed expenses. But in flexible budget, we have to proper study about variable expenses, semi-variable expenses, and fixed expenses. In fixed flexible budget, cost is divided into different categories, and these categories are variable expenses, semi-variable expenses, and flexible and fixed expenses. Okay, so the answer is A is correct. Fixed, semi-fixed, and variable expenses. Okay. Which of the following item is not excluded while preparing a cost sheet? Now, first of all, how the cost sheet is prepared. Just look at here. First of all the type of direct expenses means direct material, direct labor, and direct expenses are added, then it is regarded as prime cost. Then in this we have to add all the type of factory overhead. When in the prime cost we are adding factory overheads. When in the prime cost we are adding factory overhead, then it is regarded as factory cost. In the factory cost we have to add office and administration overheads. Office and administration overhead. When in the factory cost we add office and administration overhead, then it is regarded as cost of production. Then we have to add all the type of selling and distribution expenses. Then we will get cost of sales. This is the basic for the preparation of cost sheet. Okay. Now, in a factory overhead, all the items which are related to the factory. In office and overhead, in office overhead, we include all the items which are related with the office, like salary to the staff, staff manager, printing and machinery, printing and stationery used in the office, light used in the office. Okay. In selling and distribution expenses, we include all the expenses which are related to selling on distribution, like advertisement, like delivery van, sales manager salary, salesman's commission. These all things are included. Now in this question, which of following item is not excluded while preparing a cost sheet? Goodwill write-off. It is a purely financial nature item, so it is excluded. provision for tax. It is again related to the financial accounting. It is not included in the cost sheet. Interest paid. Interest paid. It is again a financial nature item. So property tax on factory building. Factory is used for the production purpose. Factory is used for the production purpose. So the property tax on factory building is included in the cost sheet. Okay. The most important element of cost is we are calculating cost of any product. So what do you mean by cost? All the all just a second. All monetary values for production of goods and services. Total of all the monetary value of production of goods and services is regarded as cost. If we are producing any type of goods for production or for procurement of any type of goods, we need material. So most important element for the cost is material. Okay, if there is no material, then no any type of, if there is no material, then there is no any type of production can be done. Okay. Depreciation is an example of, depreciation is always fixed. Either either we use a straight line method, either we use written down value method, machine hour rate. It is always fixed. So it is an example of fixed cost. Okay. Joint cost is suitable for, what do you mean by joint cost? When the any type of product is manufactured, then there are different type of products manufactured by one process. Okay. And different type of products. So for the calculating of total cost of these type of products, we need to calculate cost by the method of joint costing method. So infrastructure industry, there is no proper bridge or dams are prepared, no need to calculate joint by method of joint costing. Ornaments industry, no need. Oil industry, when the crude oil processing, there are different type of products are there. There are different type of products are there. So joint cost method is suitable especially for oil industry, because joint product and byproducts, different other products are also produced in the oil industry. So for the calculation of total cost of this industry, we need joint cost method in oil industry. Next, which statement best describe the role of management accountant? Management accountant prepare the financial statement for an organization? No. Management accountant facilitate the decision making processes within an organization? Yeah, it can be. But first of all, we have to read our two more points. Management accountant make the principal decision within an organization. Management accountant make the principal decision within an organization? No, because the main decision taken by the top level management. Management accountant are basically information collector? No, he is not an information collector. He makes some type of decisions within an organization. So B is the correct answer. Management accountant facilitated the decision making process within an organization. Okay, moving to the next question. In a factory, when production is increased within the relevant range, then variable cost will vary on a per unit basis. Variable cost will vary in total. Fixed cost will vary in total. Fixed cost never be changed as per the total. Fixed cost and variable cost stay in same total? No. If we are producing 10,000 units, variable cost per unit if 40 rupee, then the total variable cost 4 lakh. If we are producing 12,000 units, then variable cost should be 4 lakh 80,000. If we are producing 8,000 units, then variable cost 40. 8,000 multiplied by 40, that is 3 lakh 20,000. So variable costs vary in overall total. 4 lakh here, here 4 lakh 80,000, here 3 lakh 20,000. Variable cost per unit always fixed, but in total it always change. If a high production, then high variable cost in total, but in per unit it is always fixed. So the answer is variable cost will be vary in total. Okay, the main objective of budgetary control is why we are preparing budgets. If we prepare proper budget, then we can easily estimate how much cost we are going to incur in each and every department. If proper budget are sets, then it is very easy to coordinate between the different departments. So budget especially help in coordinating between the different departments. So the right answer is to coordinate between different departments. Okay, moving to the next question. When our overhead variance are recorded in a standard costing system? When we are record overhead variance. Okay, these are the methods. When the goods are transferred out of work in progress? No. When the factory overhead is applied to work in progress? When the cost of goods sold is recorded? When the direct labor record? Actually, in the standard costing. In the standard costing, overhead variance always calculated when it is applied in work in progress. If no work in progress, then no need to calculate, check the variance between the overhead variances. So the answer is when the factory overhead is applied to work in progress. Okay, moving to the next question. The next question. Management accounting is an integral part of management which is concerned with identifying, presenting, and interpreting the data. Identifying, presenting, and interpreting the data. What is the real reason? First identify it, then present in a proper form, then interpret the result. What are the reason behind it? These all are the work of management accountant. Next question. Management accounting is related with Formulating strategy, right. Planning and controlling activities, right. Optimizing the resources, right. So the answer is all of the above. Next question. Despite the development, despite the development of management accounting as an effective discipline to improve the managerial performance, it some limitations. What they are saying, what is the question saying that despite the development of management accounting as an effective discipline to improve the managerial performance, it has some limitations. Which of the following is the limitation of management accounting? Psychological resistance, physiology resistance, both of the above, none of the above. So the right answer is psychological resistance. Okay. The primary objective of management accounting is to maximize the profit, minimize the losses, maximize profit or minimize losses. Both these, all of the above answer is correct. Next question. Management accounting is concerned with data collection from. Management accounting is concerned with the data collection from either internal sources, either external, internal from the inside from the management, and external from outside from the business. So it is responsible for internal as well as external sources. Okay, next question. Management accounting is concerned with accounting information which is useful to the management. Management accounting is concerned with the accounting information which is useful to the management. This definition is given by Robert and Anthony. So the right answer is Robert and Anthony. Okay. Marginal costing is taken as equal to. Just look at here. As we discussed, marginal cost is also regarded as variable cost. Variable cost is always equals to prime cost plus all the type of variable overheads. Okay, so look at here. What is the answer? Marginal cost is taken as equal to prime cost plus all variable overheads. Yes, it is the correct answer. No need to look at the other option, but we can discuss about it. Prime cost minus all variable overheads, it is not possible. Variable overhead, we know that variable cost is not equals to variable overhead, but fixed cost always equal to the fixed cost is always equals to the fixed overheads. Okay, next question. Marginal costing is also known as, in marginal costing is also known as variable. In variable costing, we include all the type of direct costs plus variable overheads. So it is also regarded as variable costing as well as it is also regarded as direct costing. So the right answer is both A and B. Next question. Which of the following costs is relevant in decision making? On the basis of decision making, costs are divided into two parts: relevant and irrelevant. Relevant costs are those costs which affect our decision, but irrelevant cost does not affect our decision. So any type of committed costs which have been incurred are always relevant costs. Okay, accounting costs are not recorded in the cost sheet. Historical cost which is done in the past. So right answer is committed costs. Okay students, now if you have any doubt you can ask. For the other question we have another session tomorrow. If you all have any type of doubt you can ask. Quick reply all students. If you have any doubt you can ask. Okay, if there is no doubt we will meet tomorrow. Thank you all.